We thank the Indoco management for giving us an opportunity to host the call. From Indoco, we have the senior management with us, represented by Ms. Aditi Panandikar, Managing Director, Mr. Sandeep Bambolkar, Joint Managing Director, Mr. Vilas Nagre, President Corporate Affairs and M&A, and Mr. Mandar Borkar, Chief Financial Officer. Over to you, sir.
Thank you. Good evening, all participants. The Indian pharma market registered a growth of 8.7% in the fourth quarter, and for the year ending, the growth stands at 5.7%. IPM has added rupees 29,858 crores over the same quarter last year. Inventory days of IPM for the month of March 18 were 38 days. Inventory days of Indoco in March 18 were 43 days, which has improved from 36 days in December 2017. Now let me brief you on the business highlights. Net revenues for the quarter were at rupees 259 crores against rupees 265 crores. For the year, the net revenues were at rupees 1,017 crores as against rupees 1,067 crores. EBITDA for the quarter is 19.1% at rupees 49.4 crores as against 12.3% at rupees 32.6 crores. For the year, EBITDA is 13.3% at rupees 134.9 crores as against 14.7% at rupees 156.6 crores. Profit before tax for the quarter is 10% at rupees 25.8 crore as against 7.7% at rupees 20.4 crore. For the year, PBT is 4.8% of net sales at rupees 48.4 crore as against 8.6% at rupees 91.3 crore. Profit after tax for the quarter is 7.9% at rupees 20.5 crore as against 6.8% at rupees 17.9 crore. And for the year, PAT is at 4% at rupees 41.2 crore as against 7.3% at rupees 77.4 crore. Domestic formulations business for the quarter grew at 16.1% at rupees 151 crore as against rupees 130 crore. For the year, the revenue grew at 1.7% at rupees 595 crores as against rupees 585 crores. Top therapies which have contributed during the quarter are, along with their growth rates, respiratory 17.4%, stomatologicals 15.3%, anti-infectives 16.6%, gastrointestinal 13.4%, vitamins, minerals 21.9%. Top brands which have contributed during the quarter along with their growth rates: Cyclopam 21.2, Febrex Plus 14.7, Cital 21.2, ATM 54.2, Oxipod 12.9, Sensodent 20.3, Carvol Plus 32.4, Globenji 1.5, Sensoform 15.4, and Sensodent KF 19.8. New product introductions. For the quarter, there were no new introductions. However, for the year, the company has launched 9 new products, 6 in chronic, 2 in subchronic, and 1 in the acute segment. Company ranks 30th in IPM as on March 18 as per AWACS data. As per the SMSRC, the company ranks 23rd as on February 18 MAC basis. The prescription growth of 4% registered by Indoco vis-a-vis industry growth of 2% as on February 18 MAC basis shows positive prospects for the company. A double-digit prescription growth is recorded in various targeted specialties, namely pediatrician, gynecologist, consulting physician, cardiologist. During the quarter, the revenues from international business, formulation business were at rupees 88 crores as against rupees 121 crores. For the year, revenues were at rupees 347 crores as against rupees 414 crores. During the quarter, the US revenues were at rupees 6 crores as against rupees 33 crores. For the year, the revenues were at rupees 40 crores as against rupees 125 crores. With regards to status of ANDAs, we have 10 ANDAs 10 approvals till date, 2 tentative approvals and 36 filed for which approvals are pending. With respect to the update on Goa Plant 2, post the warning letter from US FDA, all the updates of the commitments were submitted to the FDA and remediation actions have been completed. The site now awaits a re-inspection by the US FDA. US FDA also inspected Goa Plant 1 solid dosage from 15 to 19 January 2018 and had issued 8 observations, that is 483s, for which initial response was submitted within the stipulated time of 15 days. Further to this response, updates to FDA are being submitted in timely manner. Europe revenues were at rupees 47 crores compared to rupees 54 crores. For the year, the revenues were at rupees 179 crores as against rupees 156 crores. The regulatory authority of Hungary inspected our Goa Plant 3 between 20th and 24th November 2017 and issued European GMP certification on 12th February 2018 to the facility, which will enable the company to export to all the European countries as well as Canada, Australia and New Zealand. MHRA inspection was scheduled from 14th to 16th March 2018 at Goa Plant 1. At the end of the inspection, the company received 3 critical and 4 major observations. A response was sent to the MHRA within the stipulated time with an outline of compliance plan. MHRA sought further information which is being responded to in a timely manner. Meanwhile, MHRA has issued a statement of non-compliance with EU GMP and restricted GMP certificate permitting the company to manufacture and supply 50 SKUs critical to public health in the UK from Goa Plant 1. In addition to restricted supplies to the UK from Goa Plant 1, business to the European Union is also serviced from Goa Plant 3 and Baddi Plant 1 as well. We are also getting our newly acquired facility at Baddi Plant 3 inspected by the European Union Regulatory Authority in the coming quarter. This will ensure continuity of supplies to the European Union market to a large extent. The company has taken concrete steps in shaping organization culture to ensure all data from our manufacturing site is complete, consistent and accurate in all its forms, that is paper and electronic. The corrective actions are being implemented through a newly formed compliance cell headed by the Chief Technical Officer, CTO. The company has also engaged third-party consultants and experts to correct the situation and comply with the expectations of US FDA and EU GMP guidelines. The South Africa and Australia and New Zealand revenues for the quarter were at rupees 12 crores compared to rupees 16 crores. For the year, the revenues were at 56 crores as against 70 crores. The business in these territories comprises of trade as well as tender business. The trade business is growing consistently. However, the tender business, which is not commercially viable, is not being pursued. Emerging market revenues for the quarter were at 23 crore compared to 18 crore. For the year, the revenues were at rupees 72 crores as against rupees 63 crores. Sales show positive growth in Kenya as well as French West Africa markets. The company launched anti-malarial tablets in Ivory Coast and ophthalmic products in Tanzania. On the API front, the revenues were at rupees 15 crores compared to rupees 12 crores. For the year, the revenues from API business were at rupees 61 crores, same as last year. The company's API plant at Patalganga received renewed accreditation certificate from the Pharmaceuticals and Medical Devices Agency, PMDA, Japan. The accreditation is valid till May 2023. The company has filed 2 JDMFs in Japan for allopurinol and dicyclovarin. US FDA inspections were also conducted at Indoco's API manufacturing facilities at Patalganga and Rabale, Navi Mumbai. The inspection at Patalganga facility was conducted from 7th to 11th May 2018 and at Kilolab facility from 14th to 17th May 2018. We are pleased to inform you that both these inspections were successfully completed. During the audit, the FDA inspected the entire quality management systems to ensure compliance with federal regulations. The inspection included a review of production facility, processes and procedures, training records, quality systems, and control procedures. The Kilolab facility received 0483s from the agency, while the Patalganga facility cleared the inspection with 3 observations. None of them are critical or pertain to data integrity. I now request the participants to put up their questions. Thank you.
Thank you very much. We will now begin the question and answer session. Participants who wish to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Nisar Guwakre from Lucky Investments. Please go ahead.
Good evening, everyone. My first question is regarding the domestic formulations business. Sandeep sir, if I heard you correct, you said that the number of inventory days in the channel has now come to a reasonable level. Is the 15% growth that we have delivered in this quarter because of the channel correction, or that is a sustainable growth that we can expect even in the next coming year?
Yeah, let me answer that. Part of the growth in this quarter naturally has come from the channel correction, but that is also an expectation. For the kind of profile of product mix that we have, specifically in the anti-infectives and respiratory segments, these are actually prone to higher inventory days than other therapy segments. And I'm confident that we'll be able to sustain these kind of growth going ahead.
That's great, ma'am. Also, you mentioned, Sandeep sir mentioned that regardless of the non-compliant certificate from UK MHRA, we have received a letter to supply 50 critical products. Did I hear that correct?
Yeah.
Yes.
So how does that work? Because they are giving us non-compliance and then they are asking us to supply 50 products which are critical. So, I mean, can you explain this a little bit?
Yeah. Typically, these inspections, when critical issues are found, get classified under one of the 3 categories. A, where your license is totally revoked. B, where your license is suspended for a long period and you cannot manufacture at all unless an inspection happens. And C, where the license is held but a restricted manufacturing is allowed depending on the gravity of the situation. The MHRA letter at various points reinforces the fact that despite whatever they have seen at the site, which had to do with processes of manufacturing, which was a concern, in no way was the quality of products manufactured at the site ever compromised. Therefore, we have been classified in the class 3, where we have been allowed to manufacture those products which are critical to the UK market. And the list that has come to us, which allows us to manufacture that is of 50 different SKUs.
That is very helpful and very heartening to hear. Also, if you could please tell us so when I look at your results for this quarter, now there is obviously a degrowth in the international business. Have we factored in the entire degrowth after the UK MHRA inspection, or will we see some spillover in Q1 FY19?
A little bit has been factored in,
okay,
because the inspection happened in early March.
Okay.
So possibly one month has got impacted for the quarter which is over. For the present quarter, the list we have only got very recently, meaning I also expect another month in the current quarter to get impacted.
Okay. The impact will be as much as we have got in this quarter, or will be slightly on the higher side?
No, as Sandeep already mentioned, We have several sites with UK MHRA approvals,
Right.
and every effort is being made to supply from all other sites. So we are going to try very hard to see that the impact is minimized.
Okay. And can you just highlight the finance cost, which we have seen 8 crores versus 2 crores quarter on quarter?
Yeah. See, the finance cost consists of interest expense, which is 5.39 crore. Other financial charges are 39 lakhs. And exchange loss is of 2.55. So that's how it totals to 8.
Got it. That I thought there would be some exchange loss.
Yeah.
Okay. And lastly, our gross margin, is close to about 70% even for this quarter. I am assuming that a lot of that is attributable to domestic formulations. Is that correct?
That's correct.
Yeah.
Okay. Great. Thank you so much and all the best.
Thank you. The next question is from Chirag Dagli from HDFC Asset Management. Please go ahead.
Yes, sir. Thank you for the opportunity. So when can our supplies in the US restart? Would we wait for an inspection?
Quite frankly, for US, for our current products which were being commercialized, we are in a kind of a situation where we do not own the IP ourselves. We were contract manufacturers for most products, except the solid oral which is going from the other plant which continues. That is from plant 1. When it comes to plant 2, I think I'm assuming you're asking this question for supplies from plant 2.
Yes, ma'am.
The sterile side.
Yes.
So here most of the products are owned by partners, and we have to actually get their compliance and acceptance before we are able to start shipping from that site, which is why there has been certain delays. But all the same, I think at Indoco we all believe that it is quite okay that we wait for US FDA to come down, inspect our site and clear it, after which we can go whole hog.
So first the FDA inspection will happen and thereafter partners will get confidence and hence they use
I expect so.
Okay. And for Europe, for FY19 as a whole, do we still expect to grow on the FY18 base?
I think it's a little too early right now to say. As I just mentioned, every effort is being made to minimize the impact of the plant 1 situation. As such, we already have a list in hand. We are now very clear what we can and cannot make in plant 1 for a short time. This situation, if I may elaborate, is such that MHRA will come back for an audit and then clear that site completely as well. But we are not able to time that. But in the interim, we will still take a lot of product to Baddi as well as to plant 3 in Goa. So at this point, it is too early to say to what extent we will get impacted. Otherwise, the business segment was slated to grow well this year.
You have product approvals for the same product from Baddi as well, ma'am. Is that how we should think about this?
Not all of them, but the major products, yes.
For most of the major products. Okay. And I have just 2 bookkeeping questions, sir. How does the FY18 depreciation and amortization split between depreciation and amortization? The 67 odd crore number.
For the year, no?
For the year you're asking?
Yeah.
Yes, for the year 67.71. How does that split between depreciation and amortization?
Amortization is around 27.84 crore.
Okay, sir. And one more was how much R&D did you capitalize in FY18, sir?
FY18 we have capitalized 29 crores.
29 crores. Thank you so much. Best of luck.
Thank you. Before we take the next question, we'd like to remind participants that you may press star and 1 to join the question queue. The next question is from Sachin Kasera from Lucky Investment. Please go ahead.
Good afternoon, everybody. Are the margins in the domestic market already optimum? Or because you are looking at a 15% growth next year, you think they can further improve from where they are today?
They can improve partially, largely on account of higher volume of sales coming from the Indian market.
When you say this, you're referring with respect to the full year, or you're referring to Q4, ma'am?
No, I'm talking about the full year.
Okay. No, I am referring more specific to the current quarter because already, for the full year, obviously the first half was impacted because of GST.
True. Achha, over this present quarter, you mean?
Yeah.
For our domestic marketing team, periodically weeds out all such products which drain us of margin. And, we keeping the product mix very healthy. For example, in this current quarter, one of our large antibiotic products, Weapon, which is under price control and has a very low GC actually, has heavily degrown. And that harbors well for us actually. We are quite fine with that because the profitability of the business goes up. So such measures are being strategized continuously. So I do expect the margins to marginally improve this year as well over the fourth quarter.
And do you see scope for further productivity improvement in the domestic market, madam?
Definitely. Productivity improvement will happen since we are not adding more people at all and the same people will be getting you higher sales.
Sure. Secondly, madam, if I understand right, 53 crores is the R&D spend you have done through P&L and 20 crores is what you have capitalized. So we have done approximately 80 crores on R&D this year. Is that correct understanding?
That's correct, yeah.
So what is the number that we are looking for FY19 on the R&D?
It will be overall 5.5%.
Both, okay. So something similar to what we had done this year, like 80 crores?
Yeah, around.
And how many ANDAs have we filed any ANDAs, madam, this year from this 80 crores R&D spend, or everything is more or less WIP?
We have filed 6 ANDAs.
6?
Yeah.
How many ANDAs are now pending approval?
Pending approval are 36.
76, okay. Next question is regarding CapEx. I believe this year the CapEx, from what I can see, is around 100 crores. FY18 is what we have spent.
Sachin, the pending NDA approval is 36.
Oh, 36.
Yeah. Tell me about next question, yeah.
The CapEx, from what I can see, the reported balance sheet was, including WIP, was around 100 crores in FY18, sir?
Correct. 117, yeah.
Yeah. And what is the number we are looking for 19 and 20 each?
50 crore.
Okay. So does it mean next year we are looking at some reduction in the debt?
It will happen naturally.
Over a period of time.
Okay. Thank you.
Thank you. The next question is from the line of Aishwarya Agarwal from Reliance Mutual Fund. Please go ahead.
Hello.
Yeah.
Yeah. Thank you for the chance. And I just want to know, this quarter we have shown very good performance in India. Now, do we have any adverse impact in this current quarter because of this high inventory days or maybe some kind of channel filling, or will this quarter be a smooth quarter?
I expect the current quarter to be smooth. Quite frankly, everybody who knows the pharma industry knows that year-end does involve a bit of a push from the field for their targets. So to that extent, they also take care of the liquidation because they have targets for the next quarter as well. Yeah?
Sure. And what kind of revenue growth in India we should anticipate for current financial year, and all the disruptions or maybe some changes, some realignment which we did in the previous year in the domestic business, that all those things are through and we are back to the growth?
Yeah, we are expecting to grow between 15 and 18% this year. The realignments are all done. This growth last year has come despite the poor, GST related top line shaving off, as well as us hiving off and closing down divisions like Qtr4, etc.
Sure. And if I want to ask that, what kind of breakup between the price growth and the volume growth in this 15 to 18% guidance?
I just give you the details.
Which one you want, the breakup in?
Price.
For Q4?
For the quarter?
For the next year, FY19.
That is, we can give you what is planned.
Yeah, next year, 18-19, we expect the price growth in the range of 3%. volume will be around 9% and new product will be around 3%. So 15% minimum growth will come in the next quarter, next year.
Sure. Next is, sir, coming to US, FDA inspection. So what we discussed previously, that Deva guy is supposed to visit our plant and inspect, and after that we supposed to get back to FDA and request them to re-inspect the plant. So the Deva thing is done now?
Yeah. Deva visit is over. Between us, we have felt the need to get the site audited once by third party, which is being planned currently. But all the same, Indoco is ready to face US FDA whenever they come in now.
So, there will be two inspections. One is by third party and one is by the FDA.
Correct.
And when do you expect this third party inspection to happen?
Possibly in a month's time.
Okay, and you already have requested FDA for reinspection, or you will be doing it after the third party?
It's not a question of request. You can follow up, you can ask for meetings, and you can write to them, all of which is being done.
So you are planning it simultaneously, or you are planning it after third party reinspection?
No, we are planning simultaneously.
Okay. Great. And the last question is coming to Europe. We have around 120 odd crores of revenue coming from plant 1, and we are planning to shift some volumes to the other plants. So this process itself will be taking some time. You need to get the product approvals and also. So how will be the disruptions in the quarter 1 or quarter 2 because of that reason?
See, this restricted list that we talked about, that we can start the production immediately. That itself totals to around 50 crore.
50 out of 120?
Yeah. Plus, we will salvage a good part of the remaining, and the impact, therefore, will not be as much as you...
We'll try and minimize the impact.
So when are we planning to restart, or maybe start this 50 crores production?
That soon.
Couple of weeks.
Yeah.
Okay. And are there any supplies happening right now to Europe?
From other plants, yes, of course.
Yes.
No, from the plant 1.
Yeah, even from this plant, gradually we are rolling out product based on the commitments we have made to MHRA.
Okay. And so what we should anticipate is, if not this quarter, probably from next quarter onward, at least 50 crores will come straight away in the top line from the other plants.
Over a period of 1 year.
Yeah,
not in 1 quarter.
50 crores for 1 year, but for the next 3 quarters, the benefit will be coming to us.
Yes.
This 50 crores part.
Yeah.
Okay. So barring 50 crores, the remaining 70 crores will be the lost opportunity now?
Out of that also, there is a good chance that we will salvage a part of it by sending it to other facilities, and then some part will definitely...
As I mentioned earlier, we are aggressively also following up with MHRA to get them to come back and re-inspect us.
Okay.
So we should not totally strike off plant 1 for supply of the remaining products as well for the rest of the year.
So coming to the remediation of the plant 1 as well as expectation that the authorities will come and re-inspect the plant. So any timelines you have in mind right now?
Very difficult to put timelines on this. We want to do it at the earliest, but we would have to still wait for some updates to go to MHRA, which are underway.
Sure. And one more, ma'am. Coming to the cost side, we have seen good cost control on the staff and the other expenses. So how we should anticipate this thing to pan out in next year?
See, we knew we had a tough year ahead of us last year itself, after the very, very, very difficult first quarter. So a lot of efficiency measures were brought in. To a great extent, similar cost structure will continue, although possibly on the domestic business side, which will be going all out to grow this year, especially given the headwinds in international. Some of the costs which we had contained, we may roll back now.
So what effectively we are saying, if you say the cost structure, that means a percentage of revenue, or we are talking the absolute number?
I'm sorry, I didn't get your question.
The cost is, see, whenever as a percentage of revenue, the staff cost is roughly 21%.
Correct.
Right. So when we are saying that we will maintain the same cost structure, so we are saying 220 crores of the...
Yeah. Absolute number we should be able to maintain.
Okay. Got it, ma'am. Thank you very much. This is very helpful.
Thank you.
Thank you. Next, we have a follow-up from Sachin Kashera from Lucky Investment.
My question is related to Aditi ma'am. Madam, we see the company today, your entire company is valued at less than 2,000 crores. And, that is much less than even if you see any ballpark transactions that have happened for the domestic sales are at 3-4 times sales. So, I understand, I see that the promoter holding is at 50, which is reasonably high. But is there any plan or is there any thought process from the promoters because the stock is so undervalued to increase their stake in the company?
We look at it. It looks very attractive to me right now.
Okay, ma'am. Thank you.
Thank you. Before we take the next question, a reminder once again to our participants that you may press star and 1 to join the question queue. The next question is from the line of Tushar Manudhane from Motilal Oswal Securities. Please go ahead.
Hello.
Yeah.
Just wanted to understand the other plants with respect to UK market. When were they last inspected? Other than plant 1?
Other plants. Goa plant 1, you know about, that was March 18.
Yeah.
Then Goa plant 2, you are talking only about MHRA, no?
Yes.
The Goa plant 2 was September 2015.
Okay.
Then Badri was in October 2016.
European inspection also Goa 3.
Okay? And Goa plant 3, Hungary we just covered in our MDA. That was latest.
So it's been long time, so do you think that they can be up for inspection anytime?
Yeah, not only that, not just because of time, they will anyway come back because of what they might have, generally this is what we see, isn't it, with other companies. That if they see something at one side, they will now come to the others. We are prepared, don't worry.
Agreed. But as of now, they have not given any schedule.
No.
And out of the total ANDAs pending for approval, how many are like backward integrated with the API or own API?
Around 12 to 14.
Okay. And any color on those observations, the 3, though they are mild as per your understanding?
The Patalganga ones.
Which one?
The observations of Patalganga. Yeah, they were, no observation is to be ridiculed or anything like that. But they were all improvement-related minor observations.
Understood. Okay. Thanks a lot. That answers my questions.
Thank you. Before we take the next question, a reminder once again to our participants that you may press star and 1 to join the question queue. The next question is from Cinderella Carvalho from Dolat Capital. Please go ahead.
Hi, thanks for taking my question, ma'am. Ma'am, good set of numbers in the domestic space. Just wanted to understand how should we look at any color that you can provide in terms of when can we expect supplies to start from the Unit 2 at Goa after the inspection? Like, should we say that it should happen in FY19 or maybe later? What's the understanding that we have here?
Cinderella, it will be very difficult to predict that from where I am sitting. I think we just answered one question earlier towards when we expect, why, what. We are waiting for FDA to come down and re-inspect the sterile facility, which is plant 2. And we just have to wait. We are making all efforts from our side to get them here earlier. But we'll have to just wait. So it will be very difficult and also improper for me to make any kind of judgment on time.
So basically, as of now, we have to wait. There is no timeline that we can look forward to.
Yes. At this point, I cannot make any commitment.
Okay. And ma'am, coming to the 50 products or SKUs that have been allowed for the European market, so would there be any different process for those products to be sent to the European market?
No.
As we see when few restrictions, like, when specific products are allowed, would there be some process?
As part of the commitments we have made towards overall MHRA observations, we have committed to bring in certain better quality systems as was their expectation. And those we have to add on to these products as we manufacture, but nothing special yet.
So like in case of earlier we have seen when there is an import alert and you supply, you need to go for batch by batch in case of US FDA. So similar things do we expect here, or it will be just a normal process?
Normal process, Cinderella, in any case, in Europe, product is always tested on landing, unlike US.
Correct.
As a normal procedure as well. So there's no change.
Okay. And ma'am, you have said that out of the total European, from Plant 1 Goa, we would be able to save around 50 CR, and out of the remaining 100 CR, we will try to minimize or maximize as much as we can from the other 2 units, right?
Total is 120.
Yeah. Hello?
Okay. Yes, I heard it, ma'am, 120.
Yeah.
Okay. Okay. And ma'am, any update on our Plant 1 US FDA audit that had happened?
No, we got the observations. We have made the initial outline that is submitted for corrective actions, etc., and updates are underway.
Okay, ma'am. Yeah, thank you, and all the best.
Thanks.
Thank you. The next question is from Chirag Dagli from HDFC Asset Management. Please go ahead.
Yes, thank you for the follow-up. So last couple of years, we've seen a lot of churn around regulatory activity. What has been the change to the quality organization at Indoco over the last couple of years? If you can, sort of highlight, has the organization changed? Have heads changed? What is it exactly that has changed over the last couple of years through all of this?
Let me just maybe go one step back and explain to you that the regulatory business, especially the one to Europe, has expanded manifold in Indoco over the last 5-6 years. We are operating out of various sites and making a lot of variable product mix. To the extent our corporate quality management we had not strengthened, and possibly that is the reason these kind of gaps have been seen. What we have done especially after the MHRA inspection and partly even after the USFDA at Plant 1, is restructured so that we now have a senior position which is the Chief Technical Officer, CTO, to whom quality would report. And in addition to the quality arm, we have a separate compliance arm now. So it's like having a regulatory person at site. Specifically, what has been happening with the entire industry and mostly at least with us is that to keep up with the continuously evolving expectation on various parameters and benchmarks, that is where we are falling behind, and the effort is now being made to correct the situation.
Fair point. And now this CTO directly reports to the MD of the company?
Yes.
That is how we should think about it?
Yes.
Okay. Fair point. And would you be able to quantify the the sales that you can move to alternate plants for UK?
I think around 20 to 30 crores would clearly move to other sites for licenses currently in hand. And for the others, we would be working on obtaining site variations to other sites.
Okay, fair point. And what sort of wage inflation should we sort of bake in for FY19 and beyond?
I think around 10% is to be expected.
And would you add field force, or you're okay with the current level?
No addition of field force.
No addition of field force. So overall staff cost increase should also be in the ballpark of 10%.
Yeah. Yes.
And last question, ma'am, tax rate so it was earlier thought that FY20 onwards our tax rate will go up. Is that the current thinking as well?
Yes, basically we are expecting in the range of 21 to 23 being under MAT. So
that is for this year. For FY20 also you'd be at MAT?
Same should continue.
Till when will MAT continue, sir?
I think looking at the current balance, I would say another 2 to 3 years definitely.
2 years definitely.
Okay, sir. Thank you so much.
Thank you. Next question is from Sachin Kasera from Lucky Investments. Please go ahead.
One follow-up question, ma'am. On the emerging markets, if you can give a sense, how do you see the growth next 2 years from what we've done in FY18?
In the emerging markets, we can expect a good growth at the end of the year.
So, if you want to give us some...
30%.
Around 25%.
We have done what was the number for FY18, sir, for emerging markets?
FY18, it is
72 crores.
14% growth.
8 to 82.
Yeah.
So it should be closer to 100 crores in FY19.
Correct. Yes, 90 plus.
And how is the profitability in the emerging markets?
It is good.
Better than the company average, ma'am?
I'm sorry?
Better than the?
Company average?
Yes. It is more like the Indian business.
And now that we are growing at 20-25%, will the margins improve in the emerging market business over the next 3 years? Because you must be having a lot of fixed costs associated with that business.
It will improve.
Okay. Thank you.
Thank you. Next, we have a follow-up question from Aishwarya Agarwal from Reliance Mutual Fund. Please go ahead.
Yeah, sir, just a bookkeeping question. Just want to know what is our net debt, both the long-term as well as the working capital debt, and what is...
Working capital is 109 crores and long-term debt is 172 crores.
And the annual interest outgo on this? 300 crores odd number?
Annual, in terms of annual interest expenses is around 17 crores.
17 crores on 300 crores. It is roughly 6%.
Yeah, that's right.
Okay, sure. Thank you, sir.
Thank you. The next question is from Bhavesh Jain from Envision Capital. Please go ahead.
So what has been the cash flow from operation for this year?
It's 132 crore.
Okay, and any remediation cost in this quarter, Q4?
Q4 we have not incurred any remediation cost, but we will incur some remediation cost in the current year.
Okay, FY19.
Yeah.
So can you quantify any ballpark number?
4 to 6 crore you can take.
Okay, and on the US ender, how many enders we are planning to file for this FY19?
6 again.
Okay, and the launch?
Launch now.
Good question. No, very difficult to give you an answer to that. If you can tell us, that would be good.
Okay.
After the...
I'm sorry. So jokes apart, I think you are asking about launches in the current year or launches from these filings?
No, launches in the current year, I'm saying.
Current year. See, as you know, the inside FDR files are stuck for at least plant 2 for correction. From plant 1, whatever we have filed, we can expect after a little while. But we'll have to wait.
Okay, and ma'am, out of the 36 pending for approval, how many will be our own enders out of that 36?
14.
Okay, and so we, as per other pharma companies are saying that they are facing this raw material pricing pressure because of the Chinese supply issues. Aren't we facing the same issues?
As is earlier also mentioned, on many of our APIs we are backward integrated. A few we source, but irrespective, there is some stress coming in from China on starting material of API, even for the ones we make and finish here. But luckily for us, it is limited.
Okay. Thanks a lot, ma'am. Thanks. And all the best for the future.
Thank you.
Thank you.
Thank you. Before we take the next question, a reminder to our participants that you may press star and 1 to join the question queue. The next question is from Nath Balakrishnan from Spark Fund. Please go ahead.
Yeah, hi. Thanks for taking my question. Can you just help me with what is your gross debt number at the end of FY18 and what it was at the end of 17?
Gross debt is 280 crore right now.
And what was it at the end of last year?
280. Same.
Okay. So
half yearly it was around 320. And
yeah, it had increased through the year and now we are back to the same number.
Okay. So can you just help me understand what explains this almost fourfold jump in finance cost between 17 and 18?
We explained it earlier, but just for your benefit, there are 3 components in it. First is the interest cost, which is about 5.4 crore.
No, sir, I meant for the year, not for the quarter.
Acha, for the year, okay.
Yes.
Interest is 16.84 crores. Other financial charges 1.36 crore and exchange loss of 5.31 crore.
And what was it last year?
Last year, comparatively, interest was 11.17. Other financial charges 1.19. And instead of a loss, there was a gain. That made a difference.
Okay. Fair enough. My second question was on your U.S. business. What did you say your revenues were for this, for FY18? I missed that number.
Sorry, it's there in the MDA. I think we've done around 40 crores, no, annually?
Yeah.
Around 40 CR, yeah.
Okay. And what are these products, ma'am? If you can just help us understand.
These are our solid dosages, glimepiride, allopurinol, and some ophthalmic also.
Okay, and these are all, again through partners or is this direct?
A couple of these products are our ANDAs but licensed out to partners.
Okay.
And the others are through partners.
Okay, and what would you guide for the US business for 19?
Yeah, we have a lot of issues to clear before we know when we are likely to start to get a number on this. But we are very confident for at least supplies from plant 2 to start immediately. And hoping for some approval in this year, additional, which will help us to ramp up.
This is from plant 2, you mean?
No, both the plants.
Both the plants. Okay, ma'am. Thank you very much.
Thank you. Next question is from Bhavesh Jain from Envision Capital. Please go ahead.
Ma'am, how we see the South Africa business going forward?
South Africa business has 2 components. One is the trade component and the other is the tender component. The trade component is doing well. So tenders we are not pursuing that actively because of the pressure on pricing.
Okay. And what has been the capex for this year? FY18?
117 crore.
Sorry?
117.
117.
Okay. Thanks a lot. Thanks.
Thank you. Next question is from Vishal Manchanda from Nirmal Bang. Please go ahead.
Thanks for the opportunity. Your Patalganga facility, would that contribute to your revenues in FY19?
I'm sorry? Can you repeat?
The expanded block.
Yeah. It would start...
For FY19 revenue?
Yeah. FY18, FY19, possibly half year, we could get some commercial, but not for reg. So I would not put too much behind that, possibly 1 quarter.
Yeah.
Okay, thanks.
Thank you. Next question is from Cinderella Carvalho from Dolat Capital. Please go ahead.
Hi, thanks for the follow-up. Ma'am, just wanted to know how much in FY18 you would have spent entirely on the remediation and consultant cost?
About 5 crores.
And so how much would continue for this coming year?
Same number, around 5 crores again.
Okay. Thank you so much, sir.
Thank you very much. that was the last question in queue. I would now like to hand the conference back to the management for closing comments.
Thank you everyone for participating in the call. Thanks for your active participation once again. Have a nice evening.